Good afternoon, MMTs, as trading day is over and we have a broken down Dow Jones with the daily sell signal. Not only that, we have drawn the major support line. That is at the 100-day simple moving average that we've been talking about all of the month of January. That is at 15,773. We have slightly breached it. We are at a major critical support level back in November, December, where we rallied up and made the highs. This is a daily chart, and you have a double daily sell signal. Not only that, you broke clean through the 50-day simple moving average. You got the 10-day crossing over the 10. The bull, it doesn't look too well for the bull at the current moment. However, we will tell you that we haven't had a 10% correction for the last 2 years. And calendar 2013, we have it on the website. And the thing about it is, I'm going to draw just a couple of more trend lines for the MMTs. Today we had an FOMC meeting, and we had some economic indicators. And that FOMC meeting created the Dow a lot of volatility. The Dow ended up down 189 points on the close to 15,738. Yes, it did. Nasdaq Composite down 37. Nasdaq 100 down big time, broken key support levels. What I will do is draw another trend line. And remember, the 200-day simple moving average is right there, the green line. And that is clear down here at 15, let's just call it 15,500. If we break this trend line that I'm showing here, then we go a lot lower. And we will test a 200-day moving average, which would actually be healthy for the bulls. Remember, though, in January, we had warned everybody that this particular correction and pullback would be here. However, we also were very, very clear that 2014 would have a substantial increase in market volatility. Why? Because these markets had a 2013 move that it hadn't seen, where the double-digit gains since 1997. Not only that, 2014 will have extreme volatility both for the bull and both for the bear. You're not going to get the same move out of 2014 that you got in 2013. So please, number one, wake up to that. Wake up to the fact that in the very short term, there is a technical breakdown. And when that 10-day simple moving average crosses over that 50, and that 20 keeps dropping in value, we will come down and break through here and start testing part of what we call a healthy 200-day simple moving average. Right now, though, we're breaching slightly on the 100-day. Now, let us not forget, we are in the earnings season in full swing right now. It's been a mixed bag. I will be happy to say this part of the S&P will come into play. So we know that this trend line goes all the way back over here where we broke through a major resistance area. Okay? So that's over here. And that was on 10/24 of October 2013. Now, the ridge part of that high right there, where we had a breakdown over here, back in 9/19 of 2013, the Dow got a healthy correction and a good pullback and rallied to make all-time highs. However, the last time that we had a daily sell signal and we tested that 200-day moving average, which is rising in value, the bull still has a lot of legs behind it now. And there's a lot of money on the sideline that's waiting for a home. So in the Dow 30 components and in the transports especially, is that we're seeing now where we're getting this correction. And we're going to be monitoring when we had a daily sell signal in this last pullback right here. Then we rallied up to highs, and I'm going to draw a trend line right below where this rally started, and that's 15,129. That would be very healthy. Right now, we're at 15,738 on the close. So, once again, those are those levels that I'm talking about. And I'm also going to be very clear. You are not going to get another year in 2013 again. Who knows how long it's going to be? But I can tell you right now, we were overbought going into 2014. And there was no way that this market was going to continue without a correction. The FOMC meeting was a big player today. Earnings season is upon us right now. That's important to know. And you know what? There will be buying opportunities that are coming our way. However, that technical damage has started, and at some point down here at 15.5, we're going to see how we react to the 200-day moving average. That 200-day simple moving average, my friends around the world, has acted at a great support, testing it and then making new bull highs in 2013. This is 2014. Now, volatility in all of these indexes are going to increase, and it's here to stay. And the bull was very one-sided, and the bear, well, there wasn't no bear around, but now the bear is in this tape. And both sides, the bull and the bear, are going to get equal amounts right now. So it's very important that we understand that both parties are going to have directional movements. The good stocks are going to be what we call a stock picker's market, no matter what. And not only that, we will get oversold, and we will bounce to resistance levels. Once the further deeper that we go, the longer it will take to break this reversal trend in the S&P 500. And it's the January effect that we have not seen in a very, very long time. 2013, which I'm going to go right over here, this is what 2013 in January was like. And we sold down over here. And that bull had a great move all the way up. And it's testing major support levels right now. And we have a new chairperson taking over the FOMC. And the tapering, well, it's starting. And the rhetoric, or the same type of talk when Mr. Bernanke at the last meeting said what he had to say, it's the same talk now. And sell the news and buy good stocks at support.